Will the stock market crash in 2025? Everyone's asking the same burning question. Before we dive in, let's take a step back and look at what happened in 2024, a year that completely redefined market expectations. The S&P 500 soared with a staggering 23% gain, fueled by the explosive buzz around artificial intelligence and the phenomenal performance of the Magnificent Seven: Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. These tech giants propelled the market to unprecedented heights. But here's where things get fascinating. The S&P 500, weighted by market capitalization, outpaced its equal-weighted version by a whopping 12.4 percentage points. That's the second year in a row this has happened, a rare event not seen since 1990. With this extraordinary rally, the cyclically adjusted price-to-earnings, CAPE ratio, is now approaching historic highs, leaving some analysts and investors feeling nervous. Even legendary investor Howard Marks has raised concerns about potential bubbles, especially with all the hype surrounding AI. The big question now, what's next? While 2024 was a golden year for investors, 2025 might not follow the same script. Could a market crash be on the horizon? In this video, I'll break down 5 critical factors that could disrupt the markets and spark turbulence. You don't want to miss this. Your portfolio could depend on it. Let's dive in. All right, let's talk about inflation in 2025. Because, let's face it, it's not going anywhere anytime soon. Picture this. The Federal Reserve wants inflation at 2%, right? Well, it looks like it's going to stay above that target for a while. Some experts are even calling this stayflation. Sounds fancy, but all it really means is inflation that just hangs around, refusing to pack its bags. Michael Ashley Schulman, financial advisor and chief investment officer at Running Point Capital Advisors, has a pretty cautious outlook. He's watching some big risks like geopolitical tensions, the growing U.S. deficit, and the possibility that the Fed might ease up on interest rates too soon. Any of these could make things messy for the economy. Now here's the kicker. Schulman says stocks are already super expensive right now. If you're hunting for opportunities, he suggests looking into private markets, hedge funds, or private credit. Basically, there are better places to put your money than piling into overvalued stocks. But here's the part that really stuck with me. He doesn't think we're heading for a total market crash in 2025. That's good news, right? But don't get too comfy, because he does warn about the possibility of a quick stomach-dropping correction. You know, the kind that makes you want to throw your phone across the room when you check your portfolio. His advice? Be prepared. Have a plan. Because when things get bumpy, and they will, it's a lot easier to ride it out if you've got a solid strategy in place. All right, now that we've covered the first factor, let's dive into the next one. Something that doesn't get enough attention, our national debt. And trust me, it's a ticking time bomb. Now, before you roll your eyes and think, debt? Boring. Hear me out, because this could seriously shake up the stock market. Here's the deal. Stock prices are already sky high, and they'll probably stay that way in 2025. But according to Peter Tanis, founder of Lynx Investment Advisory, the real danger isn't just stocks crashing on their own. It's something bigger, the cost of servicing our national debt. Get this year alone, the U.S. government is spending over $800 billion just to pay the interest on its debt. That's almost as much as the Defense Department's entire budget. Yeah, you heard that right. Our debt payments are nearly outpacing military spending, and it's only going to get worse. Here's where it gets scary. Countries like China, Japan, and the UK, the ones buying our bonds, might start demanding that we clean up our fiscal mess before they lend us more money. And even if they do keep lending, they'll likely want higher interest rates to compensate for the risk. Now imagine this. If interest rates suddenly spike because of this, the markets could freak out. We're talking a full-blown panic. Stocks could tumble hard. Tanis doesn't know exactly when this will happen, but he's pretty confident it's coming. So what does this mean for you and me? It's a reminder to stay on our toes. The market's been riding high, but with debt spiraling out of control, the cracks are starting to show. Have a plan, diversify, and keep an eye on these bigger picture issues. Because when this debt bomb goes off, it's not just going to shake Wall Street. It's going to ripple through everything. This third factor might be one of the biggest shakeups for the economy in 2025, Trump's tariffs. Love him or hate him, Donald Trump is back as president-elect, and starting January 20th, he's expected to double down on his signature trade policies. Now, if you remember his first term, you know tariffs were a huge part of his playbook. Back then, he slapped big tariffs on things like steel and aluminum imports. But this time around, he's going even harder. Trump's already said he's planning 25% tariffs on Canada and Mexico, and another 10% tariff on imports from China. That's a pretty aggressive move, and it's got economists buzzing. Here's why this matters. Tariffs don't just hit other countries, they hit us too. Higher tariffs can make everything from cars to electronics more expensive here at home. That means higher costs for businesses and higher prices for consumers, which could feed into inflation. Michael Ashley Schulman, he's an expert on this stuff, says these policies bring a lot of uncertainty. We're talking ripple effects on trade, inflation, and even the government's fiscal health. Plus, if these tariffs spark a trade war again, it could seriously shake up global markets. So, what does this mean for us? Well, buckle up, because 2025 might get a little bumpy. Between rising costs and potential market volatility, it's going to be a year to watch closely. All right, let's dive into a potential market game changer, the Federal Reserve pivot. Now, the Fed's been busy lately, cutting interest rates left and right. They dropped them by 0.5 percentage point in September, then another 0.25 point in November. And by the time December rolled around, everyone was expecting another rate cut. But here's the twist. It might be the last one for a while. Why? Well, the Fed's playing it cool, taking a wait-and-see approach to figure out how Trump's return to the White House and his economic policies shake things up. And trust me, there's a lot to watch. Tariffs, higher deficits, and possibly faster GDP growth. Vuk Vukovic, who runs a hedge fund in New York, thinks Trump's policies could bring a mix of higher inflation and higher economic growth. But that's a tricky combo for the Fed to navigate. Do they keep cutting rates to boost growth or slam the brakes to control inflation? And here's the wild card. Han Tan, a market analyst, says there are bigger risks on the horizon. Think about it. What if the Fed suddenly flips the script and starts raising rates again? That could spook the markets big time. Pair that with a global trade war or a spike in bond yields, and things could get messy fast. Bottom line, the Fed's next moves could either keep the market party going or totally pull the rug out from under us. If you're investing, stay sharp and keep an eye on these big picture factors. They'll be driving the story in 2025. Let's shift gears and talk about something that's been on a lot of people's minds lately: housing. Looking back at how things shaped up, consumer anxiety about housing was a huge topic heading into 2025. While everyone was out shopping for the holidays in December 2024, things were a bit different when it came to bigger purchases, especially homes. The excitement just wasn't there for a lot of people. I came across a report from Clever, a real estate data firm, and it painted a pretty clear picture. 45% of buyers and 47% of sellers expected home prices to keep going up in 2025. So that's a lot of people bracing for even higher prices, which was causing a lot of uncertainty. But what really stood out was that 68% of buyers were worried those rising home prices would push their plans to buy a home further into the future. It's like everyone's trying to catch a break, but prices just keep climbing. On top of that, 42% of people felt like mortgage rates were a huge hurdle right now. And if that wasn't enough, 41% were seriously concerned about whether they'd even get approved for a mortgage this year. So it's clear that the housing market is creating a lot of anxiety. Rising prices, high mortgage rates, and concerns about getting approved are all keeping a lot of potential buyers on the sidelines. If you're in the market, it's definitely a tricky situation to navigate right now. So, let's wrap things up. As we dive deeper into 2025, one of the most pressing concerns for investors is a stock market crash on the horizon. While no one can predict the future, the risks are definitely there. We've covered everything from stubborn inflation and skyrocketing debt to housing market concerns and potential surprises from the Fed. Each of these could trigger a shakeup, but together they create a perfect storm of uncertainty. But does that mean you should hit the panic button? Absolutely not. The stock market is always unpredictable. Crashes happen, but so do recoveries. What matters is having a strategy in place, whether it's diversifying your investments, holding on to some cash, or staying informed on the latest market trends. So, as we move further into 2025, stay sharp, stay patient, and keep your eyes on your long-term goals. If you found this breakdown helpful, don't forget to hit that like button and subscribe for more market insights. Thanks for watching, and I'll catch you in the next one.